Okay, we will get started. Welcome everyone. It's a rainy Wednesday, so I hope everyone's doing okay. Again, thanks for joining. My name is Maria Gambacorta. I'm gonna run the webinar from behind the scenes here, and welcome to our webinar. Get the most from your money. Tips to maximize PPP loan forgiveness and the employee retention credit. Before I turn it over to Corey Van Duzen and let him do the introductions, we're going to go through a few housekeeping items. I know many of you have been on our webinars before, but for those who are new to our webinars, I'm going to share this information. This is being recorded, so we will share the recording probably sometime tomorrow or on Friday. Chat and Q&A are open, so if you have any questions regarding the webinar or CP or anything like that, you can put those in the chat for me or send me an email. The Q&A, if you would leave that just for questions. So any questions that you have for our presenters, Megan, Jenna, and Corey, you can put those in the Q&A. And we're going to hold questions till the end. We're going to allow about about 15 to 20 minutes for questions. So just put them in the chat, in the Q&A portion, and we'll get to them at the end. We are offering 1 hour of CPE for this webinar. So because of that, you need to answer all 4 polling questions and complete the survey at the end. And we will send you the certificate via email within 30 days. And again, any questions on CPE, you can reach out to me. So I'm going to turn the program over to Corey. Many of you know him. Corey's been with the firm about 15 years and has that much experience, and he deals with tax matters for businesses and focuses on business development incentives. So take it over, Corey.
Thanks, Maria. Welcome everybody, clients, colleagues, friends of the firm, business individuals and people in Western New York. Didn't really think we were going to be doing another PPP webinar, and I'm here in my office so I don't get yelled at by my children who started to hate the word PPP during the heat of the pandemic. But hopefully today we will teach you how to put more money in your pocket if your business has been impacted by the pandemic, which I'm sure it has. All businesses have to some degree or another. In terms of maximizing money that might be available to you through the PPP and the ERC. So I am not going to talk very much today. The show is going to be stolen by Jenna Torella, who is a member of our audit department and has graciously volunteered to be one of our resident PPP experts. And then on the tax side, we have Megan Morris. She is a tax manager here at Lunds & McCormick, and she is also serving our clients on the PPP side. And I don't think any of them dreamt we would do something like this, and nobody knew what PPP was a year and a half to 2 years ago. So with that, ladies, I'm going to mute myself and you can take over, and please type your questions in the Q&A box, and I will be handling the questions at the end and getting answers from these ladies who are much more knowledgeable about this subject than I am. So thanks. Take it away, ladies.
Thanks, Corey. So just to give you guys a quick agenda, we will look at 2021 PPP forgiveness, give some updates on that, 2021 ERC updates, and then how those two interact. So maximizing that PPP forgiveness and ERC. And then as Maria mentioned, we'll open it up to questions at the end. So let's start with a polling question. So we're 2 weeks into the season. Do we think the Bills are going to be in the Super Bowl?
I was trying to vote and I just realized it says hosts and panelists can't vote. I was going to vote yes.
I'll give it just another minute here because I know it's important for CPE. All right, someone heard my voice and voted, so I'm going to go ahead and end the poll. Thanks, guys.
A third, no faith in the bills. We'll see how it goes. All right, so to get into our webinar, I am going to start with the PPP update and then get into some of the ERC updates. So for some of you that have attended our webinars in the past, some of these slides will look a bit familiar to you, but we just wanted to ensure that for those of you that haven't attended our webinars, or maybe you've received your first PPP loan in 2021, that we are providing some of that background and a foundation for how the PPP and ERC processes work, as well as providing some updates on some of the more recent developments that have come up in the past few months. So general forgiveness rules, a minimum of 60% of the loan must be used for payroll. Again, this is a minimum, so if you can reach full forgiveness using payroll, that is acceptable, but we have seen this becoming a lot less common as borrowers are attempting to maximize PPP and ERC for some of those similar timeframes. So if you do plan on claiming ERC for quarters that fall in your PPP covered period, you will want to make sure that you're maximizing those non-payroll expenses. So getting as close to that 40% of non-payroll would be the most advantageous for you to really leave some of that payroll aside for ERC. Be aware of expenses that may be claimed under other funding sources. So ensure your expenses claimed for forgiveness have not been funded through other programs. So this could be federal or state grants. This also includes, as we will say many times in this webinar, ERC, and also FFCRA, so those Family First Coronavirus Relief Act wages. So just kind of putting this into perspective, so if you have an employee that has all of their payroll reimbursed through a grant, you would not be able to use those expenses for PPP or ERC. So ensuring those same payroll expenses that were reimbursed under the grant are not also claimed for forgiveness. One question that we have gotten a lot is, what happens if you do claim that person under a grant and none of their payroll is used for PPP? Do they still count as a full-time equivalent for PPP purposes? Because you're not claiming their wages, they do still count as an FTE because you did keep them employed. It was in the spirit of the program. You're just not allowed to double dip on those wages. Your application for forgiveness is due 10 months after the end of your covered period. So that last day of your covered period is kind of when the clock starts. One thing to mention here, though, is that the application is technically, the borrower has until the maturity date of the loan to apply, but at that 10-month mark, you are required to start making payments. So that's really why that 10-month time frame is recommended. So with that being said, there is plenty of time to apply for forgiveness, especially if you're looking into ERC. So just making sure you have all that documentation gathered and you're maximizing both programs. You do have some time to kind of figure out what is the most beneficial for your business. Once the application is submitted, your lender or the bank has 60 days to issue a decision on forgiveness to the SBA, who then has 90 days to review and approve the amount of forgiveness. Documentation, we cannot stress how important the documentation is for forgiveness. So ensuring that you are maintaining all the documentation, so both those required files and also list of files that are required to be maintained but not actually submitted to your lender for forgiveness. So making sure you have that in a file, because the SBA does have the ability to audit loans and forgiveness applications in the future. So if you look at the last few pages of that PPP forgiveness application, the SBA has provided a significant amount of detail on what needs to be maintained. And this would be some of the information that they will be requesting if the loan is under audit. So this information not only contains the supporting documentation for forgiveness, but also goes back to some of that documentation that was required with the original loan application. So just making sure you have that readily available. It'll be a lot easier to pull together as you're doing the application rather than down the road when who knows where we'll be and what documentation is still maintained. So just making sure that that's all available now and in a file you can easily pull out. So moving on to eligible expenses, looking first at payroll, and then we'll cover those non-payroll costs. So payroll costs include costs paid and incurred during the covered period. Payroll costs are defined as wages, which include salary, wages, commissions, other similar compensation, employer portion of health, dental, life, and disability insurance, as well as the employer portion of 401k contributions and employer state and local taxes. So really nothing has changed significantly here. Again, employees are capped at $15,385 for 8 weeks or $46,154 for 24 weeks. Owner employees are under a little bit different of ruling, and they are capped at $15,385 for 8 weeks or $28,33 for 24 weeks. Their compensation is also limited to the 2.5-month equivalent of their 2019 compensation. So if that 2.5-month equivalent falls under that $15,385 or $28,33, that is the maximum you would be able to use. Owner employees also, their payroll costs include their health insurance and 401k contributions, so those need to be separately pulled out. Payroll costs do exclude any wages that were eligible under FFCRA, any wages for employees whose principal place of residence is outside of the United States, and again, ERC. So now if we move on to the non-payroll costs, so again, this is limited to 40% of the total loan. It includes business mortgage interest payments, excluding any prepayments, so those are an unallowable non-payroll cost. Rent or lease payments with related party rents eligible only for forgiveness up to the amount of mortgage interest paid during the covered period. And this is for leases that were in existence prior to February 15th, 2020. Utilities, which include electric, gas, water, sewage, telephone, which includes cell phone and business lines, internet, and transportation. Covered operational expenses, which include software or cloud computing services. Covered property damage, as long as it was not subsequently reimbursed by your insurance carrier. Covered supplier costs, and then also covered PPE expenses. And again, these are includable only if established before 2/15. They will require invoices, statements, canceled checks to prove payment on those invoices. And this is really where you're going to start to focus your attention when you are maximizing ERC by using these types of expenses up to 40% of that loan. So maximizing these will open up some additional wages for ERC purposes. There are currently 3 SBA forgiveness applications available. This has not changed recently, so that 3508S is your most simple application, only applicable for loans that are under $150,000. So it's really just that simplified checklist and certifications noting how much you used on payroll, and then certifying that you used the funds in accordance with the program. For loans under $50,000, there is no FTE considerations to be made. So, but if you do fall between that 50 and 150,000, you're still using that 3508S, but you do need to reduce your forgiveness for any FTE reductions that you did encounter during your covered period. The EASY application is based on certain criteria relating to reductions in salary and hourly rates, FTEs, reduction in business operations due to COVID-19. So if you qualify under any of those, you can use the EASY application, which does simplify the process a bit. And then 3508S is your full detailed forgiveness application. So that's where you're going to see all of the calculations for FTEs, salary reductions, the 2 tables that are required to be maintained by employee. And then one update to the forgiveness process is this direct forgiveness available through the SBA portal. So there's a new portal available that is being used for direct forgiveness, which enables a borrower to apply for forgiveness directly with the SBA rather than through their lender. So it kind of takes out a step of the process. This is applicable for lenders that have opted into the program. So if you've received communication from your lender that this would be something that they are taking part in, you would go directly to this SBA portal to apply for forgiveness. So our second polling question, select yes if you wish to earn CPE credit and receive a CPE certificate for attending this webinar.
Just a reminder for everybody, please use the Q&A box for questions, not the chat. I can only pay attention to one thing at a time, sorry.
All right, I'm going to give it another 10 seconds and then we'll close out the poll. I'm not going to share these results, so Jenna, you can just move ahead after that.
Thank you.
Okay, I'm going to close out the poll, everyone. Thank you.
So we are going to move into the Employee Retention Credit for 2021. So how do you want to advance, Maria? Thank you. So how do you claim the credit? So eligible employers must report total qualified wages and health benefits on a quarterly basis using Form 941. This can be done timely, or you can amend a previously filed Form 941, which in the case of maximizing ERC and PPP, we have seen more frequently, just to be sure that you have everything covered, making sure you're maximizing both programs. Going back and amending that 941 may be advantageous, just to make sure you have all of your ducks in a row. So it is a refundable credit if the credit is larger than the employment taxes paid. So there's a refundable and a non-refundable piece. And just as a note, in Q3 and Q4 of 2021, this non-refundable portion is just Medicare. In Q1 and Q2, this was the employer share of Social Security taxes. Payroll providers have been assisting in claiming this credit and should be able to help you if you need some assistance on what the next steps are, how to claim the credit, what information they are going to require from you. We've kind of seen this run the gamut of they just need either the wages for that quarter. Sometimes they want to see the full amended 941. So reaching out to them will really give you the best process for next steps in claiming the credit, and they should be able to point you in the right direction. Advanced claims of the credit are possible through a reduction of deposits or Form 7200. So what is the tax treatment of ERC? So there will be an add back to taxable income for the amount of the credit received, so a reduction of wage expense. One important thing to note here is wages claimed for the employer retention credit cannot be used for the R&D credit or work opportunity tax credit. Because of this, it is really important to maximize those health plan expenses for employees with R&D activity. So again, this is just similar to what we spoke about with PPP, that you really can't use those same wages for other programs. So who is eligible for the credit in 2021? In order to be eligible, a business must be partially or totally shut down due to COVID-19 during any calendar quarter in 2021, or they must have experienced a reduction in gross receipts of 20% or more in the same quarter as 2019. So there is a safe harbor available to elect to use the previous quarter to calculate the reduction in gross receipts. You'll see on the slide that we have listed all 4 quarters in 2021 and what quarters you could look for to be able to determine your eligibility. So just for example, looking at Q1 2021, so that is the quarter you're determining eligibility for. You can look at Q4 2020 to Q4 2019, or you can look at Q1 2021 to Q1 2019. Businesses not in existence as of 2019 can use 2020 comparison periods for the purpose of the 2021 credit. There also has been some discussion that contained within the latest infrastructure bill that they are discussing the elimination of Q4 ERC for all businesses except recovery startup businesses. So that is still kind of in process, and we will ensure that we get updates out as they are known. So just to go into a little bit more detail on the partial or full shutdown for ERC. So these shutdowns must be mandated by federal, state, or local governments. They must limit commerce, travel, or group meetings. So this really isn't that you've decided as a business to keep your employees home for their safety to eliminate any risk. This really has to be mandated by a government authority. A partial suspension of business means that it impacts more than a nominal portion of business activities. This portion that they determined to be nominal was one of the bigger questions we were getting, and they have subsequently said that this is defined to be more than 10% of your business activity. All members of an aggregated group are treated as a single employer, so you're looking at that full and partial shutdown as a group rather than an individual entity. And then, unlike gross receipts, where the wages paid during that entire quarter are eligible as qualified wages, only the times during that quarter that you were shut down are able to be claimed for ERC. So if only 2 of your 3 months within the quarter were government mandated shutdowns, only those 2 months are eligible to be claimed for ERC. That other month, although it falls in a quarter that you were eligible, cannot be claimed for ERC. So the maximum credit that is allowed for 2021 is equal to 70% of qualified wages. This includes health plan expenses, and this is on a per employee basis, up to $10,000 of wages per quarter. So therefore, the maximum credit per employee is $7,000 per quarter. If you determine that you are eligible for all 4 quarters, should all 4 quarters be available to you, that maximum credit would be $28,000 per employee. One thing to note is you can receive the maximum amount per employee even if you receive the maximum for the 2020 credit. So essentially 2021 is a reset, you're starting over, and you can receive the maximum per employee. There are some restrictions for employers that have more than 500 full-time employees. So if the employer averages more than 500 full-time employees in 2019, qualified wages are wages paid to those employees who were not providing services. This does not mean that the employee was sent home and is working remotely. This truly means that they were not working at all and you were paying them their typical wages. An important thing to note here, full-time for ERC purposes is 30 hours per week or 130 hours in the month, and is really just a count of those people that reached that 30-hour mark. It is not, there's no partials. So with PPP, you had FTEs that were partial and those all got added up together. For ERC, it is just if they meet that 30-hour per week, they are a 1 full-time employee. So now to get into just some of the ERC updates, gross receipts, and qualified wages. So one question that had come up a lot is what is included in gross receipts and what's excluded, especially with all of the COVID relief pay that has come into play with gross receipts in 2020 and 2021. So there has been clarification that PPP forgiveness, shuttered venue operator grants, and restaurant revitalization grants are excluded from your gross receipt calculation. And then the other question that came up a lot is, in the restaurant industry, are tips included in qualified wages? And that has been subsequently clarified that qualified wages do include tips if they are paid in cash and are in excess of $20 per month. And there's also currently no disallowance for employers that also claim the tip credit to be able to use those wages under both programs. And then the last update that I am going to share before I turn it over to Megan is startup businesses. So if your business is a startup, the IRS has clarified claiming ERC for those types of businesses. The recovery startup businesses are eligible for Q3 and Q4 of 2021 if they began after 2/15/20, have average annual gross receipts for the 3 taxable year period ending with the taxable year that precedes the ERC quarter claimed, that that amount does not exclude $1 million, and they are not considered an eligible employer due to shutdown or decline in gross receipts. So based on those typical criteria for ERC, that they don't fall under either of those. And the credit is limited to $50,000 for Q3 and Q4 2021. So that's each quarter limited to $50,000. Polling question 3, have you claimed the employee retention credit in 2021? Yes, no, or you are planning to.
Give it a few more seconds. We're at about 30 seconds. Okay, last chance. I'm going to end the poll.
I'm interested to see the answer to this one.
Yes, we'll definitely share this. All right, had a few more stragglers come in. Okay, I'm going to end the poll here and share the results.
Okay, so majority no. Some have and some will plan to. All right, and with that, I will turn it over to Megan.
Yep, so just, thanks, Jenna. Just a couple more updates on the ERC front. So there were a lot of questions about related individuals and what was allowed for ERC and what wasn't. And the IRS came out with some clarifying guidance about ERCs, and unfortunately it was not very favorable. So basically with related individuals, there's an exclusion for the employer retention credit that basically for more than a 50% owner, direct or indirect, essentially there's a whole long list of related individuals to that owner that their wages would no longer be allowed for the employee retention credit. So if you notice this list here, that includes basically a lot of relatives. It didn't include your spouse, or it didn't include the actual owner of the business themselves. So there was a lot of confusion about whether we could take those wages or not. So it is kind of nice, at least that the IRS did clarify that. But it was hard, not the most favorable guidance. So Maria, if you want to move to the next slide, we'll kind of go into why that was so unfavorable. So basically the IRS said for these related individual rules, you have to apply them using a code section called 267C. So what that does is it basically applies constructive ownership to determine if an individual is a majority owner. So basically what that means is kind of direct and indirect ownership. So that would look if you had 100% owner of an S Corp and that owner has a brother, that brother could live across the country or somewhere in the world and have absolutely nothing to do with that business. But because they share a relationship that's in 267C, which is basically just the list on the previous slide of all those relatives, they would kind of be attributed ownership. So they would be treated like 100% owner. So that would then disallow the owner of the business. It might disallow the owner's spouse or anything like that from claiming their wages under ERC. So it kind of helps to make that bubble really big. And then also how this pulls people in is if you have 3 siblings, that maybe own the business a third, neither one of or any of those people have over 50%, but because they're all related under these rules or considered related, they're all directly attributed to own 100%. So it basically kind of ends up disallowing a lot of related party relationships if there's a lot of family members that work for a business. So I think the IRS tried to do this as a way to prevent any fraud or misuse of claiming these wages, but by kind of just hiring a bunch of related family members to try to claim credits on those wages paid. But it does really hurt our businesses, where we have these family members that are working and they're actually truly getting paid for legitimate work that they're performing. So it was kind of punitive that way. So Maria, if you move to the next slide. So now to kind of apply both sets of these rules for ERC. So basically, it can really easily disallow a majority owner's wages, basically if they have any sort of descendant, whether that's parents, grandparents, brother, sister, that's all alive, their wages can easily be thrown out as no longer eligible due to those attribution rules, as well as their spouse. Basically, the only reason that you could still claim the majority owner's wages or spouse's wages in the employer retention credit is basically if there's no ancestral or lineal descendant. That's probably not likely. So unfortunately, kind of if you have a related party situation and there's some way to directly make it over 50% ownership, you're kind of unfortunately very penalized by these new rules. And it was really unfavorable guidance that came out for this. So that was our last update on ERC. So now we're kind of going to get into some meat here with maximizing PPP and ERC in 2021. So a lot of people's PPP covered periods have just been ending. So they've kind of been worried about like, I want to apply for forgiveness and get PPP fully behind me. But I also want to make sure I'm taking advantage of ERC. So we wanted to kind of jump into this webinar to kind of give everybody some things to think about or walk through some examples for what we're doing. So when you're thinking about using both programs, there's kind of some important tips to remember. So with that, The first thing is that PPP forgiveness is always going to be more beneficial than ERC. Why? PPP is 100% of your dollar. And that's also tax-free money. You don't have to pick that up as income, which is great. It's very favorable. ERC is still a great benefit at 70% of your dollar. It's a really nice program that they have come up with, but it is taxable too. So when you're trying to maximize both programs, you don't want to generally forego ERC. You want to use those dollars for PPP instead. You want to make sure always pretty much getting full forgiveness first and then ERCs after that. Kind of as Jenna has mentioned a couple times before, is basically that you can't double dip on any wages for both PPP and ERC, or if we're taking R&D credit, that kind of stuff. So it's really important to take a step back when you're doing these calculations and making sure that you're kind of considering all of these different variables, because it can make it really complicated when you're trying to get the most bang for your buck. Another thing to remember too is that 60% has to use for your payroll. So when you're doing these calculations, sometimes people might have a lot of rent or mortgage interest or a ton of other expenses that qualify. We still, even if, we can have all those credits to help increase our payroll that's available for ERC, we still need to make sure that we're keeping that 60% threshold for payroll. Another tip here is, if you have a business where there is a lot of family employees and it's very mom and pop type of shop, you can make sure to maximize those related party wages for PPP within the PPP rules about the caps and everything else during your covered period, because those employees won't be eligible for ERC. So it can be nice to kind of maybe save non-related or non-family employees to help maximize those wages for ERC and take those related party wages under PPP purposes. And another thing is it's okay to wait until you have all the data. Sometimes people want to rush and they want to get through it. And you might, in some cases, have to say pause, like even though, we might want to figure out and get these claims filed or get our PPP forgiveness application filed, you might need to wait. Your PPP covered period is generally going to spread across several quarters for 2021. So you might need to wait kind of until those quarters are fully finished, as you'll see in our examples that we're going to walk through, just to kind of see where ERC ends up or PPP, just in case you have to adjust everything. So there is kind of a nice, generous clock on this. You've got 10 months for your PPP application and then 3 years basically from when you timely filed those original 941s to amend them and claim these credits. So there's no need to really rush, or in some cases, like maybe claim things conservatively and go back and amend, but it's always nice to kind of just wait until you have all the information at play. So kind of when you're trying to maximize, there's 2 common scenarios that we've mostly been seeing. Is one, you're unsure whether you're going to receive full PPP forgiveness, whether that's you kind of, your business went down after you got your loan, so you maybe kind of got more money than what you needed to. You haven't been able to open up back at full capacity due to any restrictions or whatever have you. You're worried about whether you're going to get full PPP forgiveness from the start. And then situation 2 that we're kind of seeing is you have plenty of PPP expenses. You've got tons of expenses from either payroll or everything else, and you just want to make sure you get the benefit of both programs. And then sometimes there's a little bit of an in-between situation. So just to kind of get a feel for where we are in the webinar, our next polling question that we're going to move into is basically asking which of these scenarios you think you fall into, whether it's scenario 1, that you're unsure that you're going to get full PPP forgiveness, scenario 2, you have plenty of qualifying expenses, or number 3, you don't know yet, you might not have enough information.
And the poll in about 10 seconds here. Excuse me. And I'll share these results as well.
Okay, so we've kind of got, a relatively small amount that are unsure, about half that think they have plenty of qualifying expenses, and then some that are unsure that of which situation they fall in, this is kind of common with what we're seeing. You know, a lot of people think right now, especially for 2021, I think business has been able to get back up closer to 2019 levels compared to 2020 when businesses were shut down at the start of the pandemic. So we are kind of seeing a lot of people think they have plenty of qualifying expenses. It's just allocating it. And then there's some people that are still kind of waiting for time to pass to kind of see where they fall as each quarter goes on. So with that, we're going to kind of move into some tips for each scenario here. So if you're unsure about full PPP forgiveness, kind of what we've been doing is we've been putting PPP first in that situation, and then kind of applying the remaining payroll to see what's available for ERC. So usually when we're putting PPP first, one of the things we try to do is document, you know, as many non-payroll costs as possible. So whether that means, you know, you've got a lot of rent, or maybe you're a manufacturer with a heavy utility cost, something like that, trying to document and maximize as much of that 40% as we can, because for all of those dollars, that could potentially leave a payroll dollar open for ERC at the end when we have any extra expenses. So kind of with that, you know, obviously that would mean if we're maximizing that 40%, we're kind of focusing on using as little payroll as possible for PPP forgiveness. So closer to 60% of that PPP loan. With this, I kind of want to point out as a reminder here, we kind of are seeing people, you know, maximize employee retirement plan contributions, or things like employer state and local taxes, employer like life and disability insurance, because in PPP world, those are all valid payroll expenses for forgiveness. So they can help you get to that 60%, but they're not going to be an ERC eligible expense. So that can be a good way to kind of get some payroll dollars if you have those type of expenses to hit that 60% goal without kind of sacrificing your ERC wages. When you are doing this, it is really important to kind of remember any FTE or salary wage reductions you might have to experience on your application, because a lot of those, both of those tests kind of end up coming out of your big pool of expenses that you allocate at the end, whether salary and wage reduction is just a direct dollar for dollar subtraction of expenses, or the FTE calculation, if you don't qualify for a safe harbor, can be a proportion. So it's important to kind of keep big picture that you might, you know, your PPP loan might have only been $300,000, but you actually need $350,000 of PPP eligible forgiveness expenses to make sure that you get that full $300,000 forgiven. So if you're unsure about full PPP forgiveness, basically the biggest strategy is kind of focus on PPP, and then hopefully there's some ERC kind of left at the end, and we can get a benefit there. But PPP is 100% of the dollar, so that's why we're kind of taking that approach. Moving on to the next slide. And then our second situation is we have plenty of expenses and we want to maximize both. So with this kind of approach, I like to nickname it almost the circle method in a way, and it can be a little frustrating and a lot of work to compute it. But basically with this approach, because you think you're going to have plenty of expenses and you want to maximize both, usually what we've been kind of doing is maximizing ERC first, if we think we have tons of payroll, and then kind of seeing where that payroll ends up for PPP forgiveness purposes, and then maybe going back and adjusting some of that payroll that we allocated for ERC. If we get to the end and kind of realize like, oh, maybe because we've allocated so much to ERC, we're a little bit short for PPP forgiveness, and we don't think we're going to get the full forgiveness amount. So it can kind of be a little bit of a circular calculation that makes a lot of sense at the end, but it can get a little muddy while you're working through it. So to kind of help give what our thought process has been, or help you maybe understand it if you're trying to take this on yourself, we're going to walk through an example. It's pretty simple, but hopefully it will help kind of give some techniques and strategies as for what we've been doing. So in this, here's our fact pattern. We've got an S corporation. They received a PPP loan of $120,000 on March 1st, 2021. So with that, they're going to use the 24-week covered period. I will say when you're trying to maximize both, usually we've been seeing that the 24-week covered period is very beneficial because ERC is looked at on a quarter-by-quarter basis for 2021. So it can be nice to kind of spread that PPP covered period out for as long as we can to make sure that we can get as many covered period expenses as possible in that window. So in this case, based on the date of 3/1, our covered period would be 3/1 to August 15th. Corey, he's going to be an employee listed on our spreadsheet. He's the 100% owner of this S Corp, and it qualifies for ERCs for Q1, Q2, and Q3 of 2021 so far. Other assumptions, these were just kind of to make this example a little bit easier. There was no FFCRA or other funding for any other wages. We didn't take qualified health plan expenses into this calculation, just to kind of keep things a little bit more straightforward. And on the PPP side, they're not really worried about any FTE or salary and wage reductions. And then also just to kind of note here, there's other non-payroll costs or non-ERC eligible costs from a PPP front of $40,000. So that's made up of rent, utilities, mortgage interest, retirement plan contributions, all that good stuff. So kind of if we move in to our next slide. So in this case, when we do these calculations, we usually go quarter by quarter during the covered period and for ERCs, since ERCs are determined on a calendar quarter basis for each quarter. So in this case, for Q1 2021, that's when most people got their PPP funding, whether it's round one and you are a 2021 borrower for the first time, or you got a second round PPP loan. The PPP loan application was open until May, so sometimes people got it, in early in the second quarter, but we saw a lot of borrowers kind of get right in and get that money in the first quarter of 2021. So with that first column there, kind of what we do is we break our first quarter wages down into our period before we get PPP funding, so our pre-covered period. So in this case, we cleanly got our PPP loan on March 1st. So we're looking at January's and February's wages. We know that we can look at those for ERC first. We're not worried about any PPP window or anything like that. So we want to try to maximize for ERC as much as we can before we ever got any PPP dollars. And then for the month of March, we have our wages listed for each of our employees. And that's a period that overlaps our covered period for PPP. So we want to make sure that we're kind of maximizing or allocating as little ERC as possible for that same period as to the extent that we can, just to make sure that we maximize what we have available left for PPP. So then column 3, as we walk through this, so that's basically going to be our PPP wages that we use to maximize ERC. And then that will allow us to allocate our total ERC claimed for each employee, and then our PPP wages that are left remaining. So to kind of walk through this on an employee by employee basis for this example. So we have Corey, he's our owner of our S Corp. So he's going to qualify, unfortunately, under those related party rules for ERC because he has a living relative who's John, who's his brother, who's our next employee. So even though we have their wages broken out at the same time between our ERC and our PPP periods, they're not eligible for any ERC wages. So we don't have to really worry about considering ERC for those two because they fall under the the related party rules for ERC. So we're going to allocate those wages 100% for PPP. I did put a little asterisk here that we're going to consider all our limitations for PPP wages at the end of this once we kind of go through our quarters for ERC. So then our next employee is, whoop, can you go back to the next slide, please? Or last slide. Okay, so Jenna, in this case, if we look at how this spreadsheet works for her, she got $12,000 before we got our PPP loan funds. So we're going to take our full ERCs, $10,000 right out of that $12,000. So then we know the $5,000 that she was paid in March, those are allocated 100% to ERC. However, Megan, for me, my wages, I didn't quite hit that full $10,000 in that first 2 months. So $8,000 are for ERCs. So then we know that we need to take $2,000 of our PPP covered period wages to maximize my ERCs for $10,000. And then that will only leave us with $4,000 left for PPP out of this short window in our covered period from Q1. So basically where that $4,000 is coming from is the $6,000 less the $2,000 that I needed to help make me have the full ERC potential. And then Dave is our final employee. He was only paid $8,000 this quarter. So we're going to use all of his wages for ERC. And then we have $0 left for PPP. So then kind of as we move into our second quarter and we're looking at our wages, the second quarter is a little bit easier because in this example, the whole entire second quarter is in the covered period. So we don't really have to worry about breaking it out between the time period that was eligible versus the time period that wasn't eligible. We can just take the whole quarter. We know that that's both PPP and ERC eligible. So we kind of apply the rules of ERC, subject to our max cap of $10,000 based on the wages paid. So in this case, Jenna and I both max out at $10,000. Dave got paid $9,000 this quarter. So we use all of his wages for ERC and there's none available left for PPP. And then basically Corey and John, because they're related, none of their wages are eligible for ERC. So we'll only consider them for PPP. Again, we're just gonna apply those wage PPP limitations at the end. So moving into our final quarter, quarter 3, this is going to kind of work exactly like quarter 1 did, except for it's slightly the opposite in the fact that, our PPP covered period was first in the quarter, and then our remaining time after that ERC eligible is towards the back half of the quarter. So basically this is a similar thing to what we did in that first slide, except for we're kind of looking qualified wages post covered period first, and then kind of seeing what we need to take from the period that overlapped with our covered period to allocate to make sure we maximize ERC. So then kind of as a summary for how this turns out on the next slide, this is all for PPP purposes. So basically this kind of takes what we said after we took our ERC credit in Q1, Q2, Q3, what was within our covered period. Those wages on those first 3 columns there total up to the total PPP wages available in our 4th column. We then apply those limits. So Corey, he was an owner. His comp is limited at the max of $20,833. John, his brother, not an owner in this situation, so he gets the $46,154. And then Jenna and I are under any limitations, so we just get to take 100% of our wages that were available for PPP. If you'll notice on here, we're not allocating any of Dave's wages for PPP because we use them all up for ERC purposes. So where this can get a little bit tricky if you're trying to maximize this yourself, if you've got a lot of part-time employees or employees that are right around that $40,000 a year threshold, so about $10,000 a quarter, you have to be really careful when you're doing these calculations because you could end up kind of eliminating a lot of PPP wages if you use those dollars for ERC. So that can kind of, you might want to switch your approach that you take if you know you're going to fall into those kind of people. Or kind of category, depending on whatever your industry is and your types of employees are, or however, if you maybe have something like doctors or lawyers, high tech like engineer type people that are paid high salaries, it's not as big of an issue that we're seeing where they really run into any problems about allocating it this way and still having enough wages. So in this case, after our limitations, we see we only have $104,000 or just under $105,000 for our PPP expenses. Obviously, since our loan's $120,000, we're falling a little bit short on using just wages alone. But based on our fact pattern, we know we had an extra $40,000 available. So there's plenty here. If there wasn't, you might have to go back and say, okay, maybe we don't take, $10,000 or $15,000 of wages for ERC somewhere to help maximize it and make sure we get the full perspective. Even though we're not taking any wages for Dave for PPP, we would still want to make sure you consider him for the FTE or salary and wage reduction tests on your PPP application. So we did have some, for 2020 borrowers that were managed to take ERCs where we would list, 0 qualified wages, but that they would still be an FTE of 1 or 0.5 because you don't want to, they were truly employed and they were working. We're just not using their wages for PPP forgiveness. And then kind of our final slide here is just the ERC summary that kind of shows what our net benefit ended up being across those 3 quarters. So we pretty much had a pretty even amount per quarter based on those employees that were eligible in this example. But it does allow us to get total ERC credits here of $59,500. Since ERC is pretty much taxable, we'd have to reduce our wage expense on our 2021 tax return by the amount of our credit, but then we would also get our PPP loan forgiveness of $120,000. So right here, if we even assume a 30% tax rate, which chances are it wouldn't be that high, they're still kind of getting a net $40,000 from ERC. So with PPP and the kind of after tax benefit of ERC, you're kind of looking at $160,000 of cash flow into your business. So we've seen, some of these credits for ERC be almost nearly as large as people's PPP loans were you know, depending on the salaries that went into those PPP computations. So with that, it looks like we've got a lot of Q&A. Sorry, I think our presentation part took a little longer than Jenna and I thought to walk through all that, but we will stay on and answer all these questions, and please keep submitting them as they come in or as you have them.
Thank you, ladies. Meg, take a drink of water. There you go. That was a lot of information. Thank you. Very good. So first question, has the IRS provided any additional guidance on what is included in supplier costs?
So they haven't given, and I'm thinking this is SBA on the PPP side, but they haven't given specific examples, but what they do define a supplier cost as an expenditure for the supply of goods that are essential to the operations of the borrower at the time the expenditure is made, and it has to be pursuant to a contract order or purchase order. So that's really the most concise guidance we've received. We have not seen anything in terms of examples.
And one helpful thing I think to note on here too is they kind of snuck in the SBA guidance that perishable goods, so basically food, if you're a restaurant, did qualify as a covered supplier cost. So I know, especially on our 2020 applications for any restaurants that are clients, they kind of maybe struggled because either takeout didn't go well or they couldn't open or something like that. So we were kind of able to take food costs in there as a way to kind of get some extra costs in.
Thanks, ladies. Next one, this has been an issue I know for much of PPP, and that is if you're paying rent to a related party, are there any additional rules in order to qualify those expenses?
So those are only eligible up to the amount of mortgage interest paid during the covered period.
So you have a cap on it.
Correct.
Thank you. Next one, how long are you seeing it is taking to get the ERC refund if you amend the 941? And how long are you seeing it take to get the refund if you timely file the 941 with a refundable credit? So not an amended return.
This is kind of, I think, all over the board. Sometimes we've seen timely filed ones take just as long as amended, and then sometimes the amended takes a long time, and sometimes it just depends based on where the IRS backlog is. I think they're trying to get a little faster, but it kind of seems to be a 10 to 12 week turnaround, even just on a regularly filed 941, and then amended. I think it honestly just depends on wherever it falls in the IRS's timeline. There's some that have been sitting around for forever, and we hope that we're hear a response soon, and then some where they kind of seem to come back pretty quickly. If you know that you're going to get a pretty sizable ERC, one thing that you can start to do is reduce your deposits. I would just make sure if you've got PPP2 at the same time that you're not claiming ERCs that kind of then hurts you for forgiveness at the end. So as long as you do your planning and you make sure it looks okay, and you can go ahead and claim those ERCs or conservatively claim the ERCs. So you at least kind of get in line for some of the money and then amend to claim any additional.
Thanks, Meg. For ERC, mandatory government shutdown, are essential businesses then not qualified? We are in childcare. Do we need to access a written order /doc to prove this?
So there are certain criteria that can be met in order to claim eligibility. So I think within the IRS frequently asked questions, there's things relating to reduction of hours or certain aspects of your business were required to shut down that would make you eligible under the full or partial shutdown. But I think we may need a little bit more information on really what the impact of the shutdowns were on your business. So if you wanted to reach out separately, we can certainly discuss the specifics surrounding your shutdown.
Thank you. Next one, can we choose what part of the covered period for PPP forgiveness we use in order to maximize ERC? So in particular, they want to use weeks 10 through 24 because that will allow them to use the first 9 weeks for ERC. Are you allowed to move around your time period for PPP?
So we've kind of, we did this in 2020 where we would list what our covered period was and then just kind of provide to the bank whatever expenses we wanted to use for PPP. And we didn't really get any questions on that. So you can claim a full 24-week covered period, but not provide 24 weeks of expenses. And that hasn't really seemed to raise any questions.
So you can move it around.
Correct.
Yep. Yeah, I think your example showed that too. Let's see, if 60% payroll threshold, does it include not only gross wages, but also employer paid benefits and state and local taxes, or is 60% only for gross wages?
It does. It includes gross wages as well as the benefits and taxes. That is what is considered your payroll cost for that 60%.
Nice. What happens if you've applied for second quarter ERC, but haven't heard yet whether they are approved? We work with a PEO that has a deadline of 10/7 to submit third quarter ERC requests so they can include in their 941.
So, I mean, in this case, sometimes with these ERCs or really anything with the IRS, it's taken them a long time to process. So if you are using, a payroll provider and you maybe haven't gotten something back yet, maybe talk to them and see if they have any way of checking. Unfortunately, if you try to call the IRS these days, chances are you can't even get through. So they are kind of behind, but don't be afraid. I guess ERCs are looked at on a quarter by quarter basis for 2021. So just because you claim the maximum amount in Q2, that doesn't really affect your calculation for Q3 at all, as long as you're eligible for Q3.
And we haven't seen anything get denied yet, have we, on the ERC side?
No.
I haven't heard of anything getting denied. But yeah, and if you have further questions, contact us, and don't hold your breath, like Meg said, when trying to get in touch with the IRS or expecting some sort of answer. I mean, there's stories of semi trucks full of mail in their parking lot, and I just got an answer to a letter that I wrote maybe 12 months ago. So they're behind. For given PPP loans and ERC received, can these be excluded from the gross receipts calculation? I believe we answered this one, right? They can be excluded, right?
Mhm.
Yep. See, I was listening. For the first and second quarter, the guidelines say you can use the prior quarter's gross receipts in determining eligibility for ERC. ERC was extended to the third and fourth quarter. However, there has been no guidance regarding if you can use prior quarter's gross receipts in determining the eligibility for the third and fourth quarter.
Nope, there was guidance provided. The IRS did clarify that does extend to the third and fourth quarter as well, that safe harbor is applicable. So that's why our slide kind of listed those safe harbor quarters as well.
Thanks, Mike. CARES, HERF, HEERF, you know that?
Got it.
Okay, all right. I might have probably butchered the acronym pronunciation. 2 and 3, could also be used for payroll, like PPP. Does this also have to be excluded from ERC?
Correct. So similar to PPP, CARES funding, HERF funding, that would all have to be segregated and can only be claimed under one program.
Nice. What's the HERF funding? Is that the
Higher ed.
medical? Oh, higher ed. I got it. Okay. That's why I didn't know what it was. Do you have any additional color or information about the possibility of ERC being eliminated for Q4 2021?
So right now, this is just kind of in that infrastructure bill. That's just a bill. It could get torn up and mean absolutely nothing in the grand scheme of things. I think it's going to get harder and harder for them to eliminate things. If, at the end of next week, we're in October. So I think kind of once we hit that fourth quarter, it's going to be really hard for them to justify eliminating it. There's precedence that could happen with, other programs and stuff. Sometimes laws are retroactive. So I'm not saying it couldn't happen, but who knows at this point with the way the US government is getting things done. So.
Yeah, I wouldn't bet on any compromise coming out of Washington anytime soon. Would you please review how the covered period is determined? Thanks.
So the covered period starts the day your PPP funds were deposited into your bank account and goes anywhere from 8 to 24 weeks. from that date.
Thanks. How would you change the ERC calculations if you have already applied for and received full PPP forgiveness?
So I guess that kind of depends on how you applied and achieved that full PPP forgiveness. If you only directly allocated whatever wages that you needed, and you kind of specifically spelled out to the bank which employee they took those wages for, I wouldn't take anything for ERC from those wages that you already claimed for PPP. So you would kind of just almost take the leftovers basically for ERC. So if you had wages outside of those covered periods in the quarter, you could look at those for ERC, or if there was kind of excess. So say sometimes, your loan was 500,000, but you listed $750,000 of expenses on your PPP application. You kind of have some extra wiggle room there in the IRS guidance that was given for ERC to kind of claim and take ERC on those like $250,000 of additional expenses. But kind of once you're done, you want to be very careful and just make sure that you're not kind of trying to look like you're double dipping anything, and make sure you have the documentation that shows what you are allocating for.
Thanks. Has anyone seen a template for maximizing PPP and ERC forgiveness or benefit? I think it might kind of be impossible because it's kind of a circle calc, ladies.
Yeah, so this is I feel like our calculations all kind of vary depending on how the data is provided and what each specific client situation kind of is. But if you want, you can kind of get in touch with us about your situation, and we may be able to help either provide guidance or help you with that calculation, so you can make sure that you're getting the biggest bang for your buck.
And I like Megan's example. When we were preparing for this, it kind of turned the light bulb on for me for understanding what the circle calc meant. And if you lay it out like Megan and then do the comparison at the end on whether you're over or under on the PPP stuff, that's if you're overfunded for the PPP forgiveness, you don't have to do anything else. If you're underfunded, then you got to go through the circle calc. So that's probably a methodical way to go after this if you're trying to do it yourself. Or you can contact these ladies and we can help you out. Next one, how is the covered period for ERC determined? That's just quarterly, right?
Right, that's just your 4 quarters of 2021.
Can you use the same payroll for HERF and ERC?
It's my understanding that you cannot. I think it would follow the same logic of the other COVID funding, that it has to be separated between funding programs.
That's logical. And we're out of questions. Last call. All right, we're only 5 minutes over. Thank you, ladies. You did a great job. I learned a lot today. Thank you for everyone who attended. And please contact us. This stuff. Meg, what's your thing? Flying an airplane and building it?
Oh, we're building an airplane and flying it at the same time.
It just keeps changing and changing and changing. But we're these ladies are on top of it. If you need help, call us, email us, text us, Teams us, LinkedIn us, whatever you want. We're here to help. Thanks, everyone.